Okay, and yeah, I've been tapping away at the computer and penned a little article called "Money in the Metaverse." And what is it about? It's basically, I guess, it's aimed at no coiners, people looking in on the crypto world and just looking at it and with kind of bemusement, bewilderment, and kind of interested, but not exactly sure what the hell is going on. And if you've been working away in your job and grown up and like I did in the 80s and 90s, and you kind of seen all this tech just boom in front of our eyes, right? The internet, technology stocks, Facebook, etc. And if you have not invested in any of those, you've kind of really missed out on some life-changing wealth opportunity, right? Missing out on the tech boom, even though we had a couple of busts here and there in 2008. Look where the stocks are today in 2021, right? It's been monumental. And so crypto is kind of the next evolution, right, of the internet in terms of investment, as it's basically taking aim at the financial sector, the banks, right? And they have not been disrupted by the internet up to, I would say, last few years, right? First Bitcoin got launched. It was kind of an underground movement for a few years, but last few years it's really been adopted, right, by companies, by billionaires like Elon, etc. So come with me on this little journey into the metaverse. And here we go. I'll just click on the tab. And so here we go. Money in the metaverse. It's massively disruptive technology, MDT, right? The metaverse will spur the transformation of massive wealth from the grave, from the boomers to cradle, their offspring and grandchildren via the blockchain. Which is home to NFTs, digital properties, which revolutionize private ownership, to DeFi, which is my favorite one, being Hex, of course, the true DeFi, the one that kicked off this movement in my eyes, right? And Hex upends legacy banking and financial products, right? Because it's a certificate or deposit, a savings instrument on the blockchain. And of course, you've got Bitcoin itself, which has the power to defund nation states themselves, right? There's a big old, as we've seen in the past year, defunding of the police, etc. Or Bitcoin can actually defund nation states, right? We're kind of seeing this with El Salvador, which is gonna, I believe, spur on neighboring countries to follow suit, right? And what Bitcoin does is really rein in the fiat currency proliferation, your pounds, your euros, your yens, and the dollars. How and why? Because it basically highlights the difference in supply that, as Bitcoin is on a fixed supply curve, and it gives you guys who are earning a wage or have some savings to divest in sovereign currency, right? A free choice how to allocate those sovereign currency tokens upon receiving them, right? Before Bitcoin, you didn't really have much choice. You had a stock market, you had bonds, you had gold and silver. Now you've got a fourth choice, which is crypto and Bitcoin, etc. So a global nationless monetary base layer relieves the burden of a single nation to uphold a reserve currency, right? And there's been multiple reserve currencies over the hundreds of years, right? Before the dollar, you had the pound. Before the pound, it was the Portuguese currency, right? And so on. And how did they get that reserve currency status? It's normally through territorial and resource grabs, a kind of warring tribal domination, economic policing through sanctions, which I believe should be consigned to the history books. Is it 2021? Are we not enlightened yet? And so the problem with the US dollar, is its distribution network, or the plumbing, which is upheld by a cartel of inefficient legacy financial institutions. Bitcoin, Ethereum, and other future public blockchains could help to eliminate underbanked people in the world as long as they have access to a smartphone. Everyone could have access to essentially free banking on a public trust network, right? And here's an example. This is Strike app, produced by Zap Inc. It's a Lightning payment startup, just a little startup company, right? And it has announced Strike Global. So here we go. According to CEO Jack Mallers, I believe he's a young kid, 26, but he's a real go-getter, right? He's if you watch financial news like CNBC, Bloomberg, you probably see him pop up now and again right now. So according to Jack, the combination of the Bitcoin network, Lightning Network, and Strike, that's his app, allows anyone to send any amount of money at any time for zero cost. And so now we have an open monetary network that can physically settle any amount of value at any time to any place at virtually no cost. Combine that with an application that allows you to utilize this open monetary network with your bank account, and you got monumental innovation. Pure disruption. Indeed, Naval Ravikant, you will see him on Twitter. He's a quite prominent guy on there. He predicted that 90% of jobs on Wall Street will be gone, I believe, when he made a tweet, in a decade. And I think that could be underestimation, which I believe will play out this decade, certainly by 2035. The cryptographer is the new investment banker. So if you guys got kids and they have interest in computer science, yes, they could do well in the future. Cryptography, right? Remember those investment bankers in the 80s, 90s, driving Porsches? That could be your kids, right? So younger generations, they just tend to trust and embrace new technologies since they often grown up in an environment where the internet is the backbone of everything, right? Information, social engagement, education, entertainment, shopping, even entire careers are being built around the internet. Think of all the Instagram influencers, right? So blockchain is becoming an integral part of the internet's DNA. In fact, it could be argued that the blockchain should have come first rather than as an afterthought in an ideal world. Unfortunately, we don't live in an ideal world. So blockchain could have been the foundational protocol layer, but the world is messy, and blockchain is fixing a lot of the problems of 25 years of internet adoption, right? Namely cybersecurity and overly powerful tech monopolies. In nature uses centralized decision makers for speed and decentralized decision makers for correctness. So you need a natural law for the truth, right? Millennials are more likely to have bought some Bitcoin a few years ago, some even sub $1,000. Boomers, on the other hand, are only a recent addition to this space. Millennials and Gen Zers stand to inherit more than $30 trillion in wealth in the coming years from the stock market. I think it could be even more right now. I think it's 35 as the stock market keeps on going up. This could be ticking up even higher. I believe a large portion of this wealth will be funneled into digital stores of value, right? Such as Bitcoin, Ethereum, Hex, and other cryptocurrencies. So owning a piece of this metaverse makes more sense to the younger generation than something as archaic as gold or paper securities. We're in the digital asset world over here in crypto. Indeed, many have already become Bitcoin millionaires, some even billionaires, right? And this picture, which I'm going to get to in a minute, illustrates the enormous growth that Bitcoin has achieved and the wealth generated for those early adopters and holders. They call them hodlers in the crypto space. So hodlers are normally super rich because they are not really swayed by the ups and downs that go on day to day, week to week, year to year, right? So investors who foresaw the recent developments and view the blockchain as digital property, they actually may have forgotten the cost of owning a physical home and funneled that ownership carrying cost into Bitcoin. So just $500 a month will be worth $1.6 million today. And this chart is really, really amazing. So the correct determination or the primary trend is the most important factor in successful speculation, right? So these early Bitcoiners who foresaw all the developments 10 years later, right? 5 years later, are in the green big time. And look at this. So I just took a start date. And this is a great website, by the way. Do I have a link? No. I'll post it when I'll make an edit and post the link. But June 17, 2014, right? I entered the date just this last few days ago, entering $500 into Bitcoin on a monthly basis. On a monthly basis, the total USD is only 42,500. You would have acquired 47 Bitcoin, and today's Bitcoin dollar cost average value is $1.6 million on a monthly basis, so $125 a week. Return on investment, 3,680. I believe that's like a 39x, or no, I'm sorry, a 36x. So you kind of take one off the percentage. I caution anyone that charts alone tell the whole story. Careful all the technical analysts that YouTube has enabled to appear in front of everyone's eyes, including myself. Charts are not the end all or be all. You must have some more fundamental thesis as to why you're putting money to work in a particular asset or class of assets. So blockchain, like the internet before it, like the internet stocks, had a fundamental driver. Disintermediation and S-curve adoption of new technology. The iPhone created the demand of what? A mobile computer right in your pocket. It wasn't the other way around. Landline, anyone? So anyone still use a landline? Not me. Disrupted the phone company. The phone company was actually a big negative against internet adoption, right? They didn't want, so the early internet guys, they were hopping on board the phone network, copper wires, and submitting like information packets along those copper wires, right? And the phone company was like, what the hell are these guys doing? So, but eventually it forced their hand. As more people got online, American Online, etc. Remember those CDs used to get? It actually pushed the phone company into installing DSL lines, ADSL, fiber. So, and then we went mobile. So the mobile wave came. As information is democratized, you get rid of information. Middlemen, think newspapers. You ever bought a newspaper recently? And even journalism as a profession. Now anyone could be a journalist, no formal qualifications needed, which brings about its own set of issues, of course, fake news and who to trust. Indeed, unedited, unpaid content may be more emotional, but it is subject less to paid distribution of information by special interests, right? If you can have a small outlet of information and control what they say, these rich companies and politicians will use that to their own benefit. So back to charting. So newbie chartists can draw lines connecting highs and lows, calling them trend lines, then claiming it means something without formal training. And the track record, buyer beware. They may make up a story explaining the significance of it all. The reality, however, is without the required knowledge, they are just engaged in curve fitting. And what knowledge is that? Basically, the overall view of the trend, right? Of the environment of the asset they are looking at. So technical analysis is useful, but one must also capture the language of the market. I like this photo a lot. This is funny. So I guess it's in the Caribbean somewhere, and you've got this weather station. It's got the coconut hanging off this little wooden kind of branch. And if it's coconut's moving, it's windy. If it's still, it's calm. If it's wet, it's rainy. If it's dry, it's sunny. If it's white, it's snowing. If you can't see it, it's foggy. And if it's gone, it's a typhoon. Have a nice day. So the coconut will tell you the weather day to day, but it won't let you know that you're entering hurricane season or typhoon season, right? Unless a man, so this is a great quote by Jesse Livermore, one of the greatest or most famous stock investors back in the 30s and even the 20s, I believe, 20s and 30s. Bit of a playboy as well, bit of a playboy. So unless a man can anticipate future events, his ability to speculate successfully is limited. Speculation is a business. It is neither guesswork or gamble. It is hard work and plenty of it. Jesse Livermore. So I'll give this link to the Market Sniper. I've known this guy for over 20 years. So good guy, great guy, honest, and a adept trader. Very, very good at trading. So what I kind of say, it takes a special type of mindset to be a speculator. And it's not a lifestyle choice that I actually encourage. It comes with a lot of emotional burdens to speculate. And that emotional toll generally spreads out into your personal relationships, right? You have been warned. So if you still feel the need to scratch that itch, seek some training, just like you would before embarking on any professional career. I'll pay the costs to speculate, and I've come out ahead barely just, but I don't think it is actually worth it. I wish I was just a long-term investor of 3 or 4 assets and just put my money to it slowly but surely, right? Dollar costing, like this Bitcoin diagram shows, right? Just plugging away $500 a month, and look where we are today, 1.6 million. There you go. Back to this. So yeah, gold suffered a 20-year bear market from 1980 to 2000. I'm going to relate this to Bitcoin because I think it's important. So once the asset was repriced sufficiently from a point of no free market action and a clear mispricing, so it was on the books for $35 to the point where there was no new demand at the given price, peaked at $8.50 in 1980. Into the bear market, 20 years, right? Because what is gold? Gold's not a business. It's why Buffett never really invested in gold. It's just he calls it a barbarous relic. I think that was Greenspan who said that. But even he was kind of right about gold to some extent. So I believe Bitcoin at some point will experience a long, drawn-out, decade-plus bear market, but not before it has gone on to become the new gold standard of money, as Bitcoin is scarcer than gold and introduces unique properties that gold cannot replicate. So we've still got some ways to go in Bitcoin, but at some point, what's the use of holding it, right? It's going to sit there, right? So digital worlds, the standard. The creation of digital worlds for the masses, which simulates the physical world, is accelerating. The trend is getting bigger, right? What started out as a small subset of geeks in the early 1980s with the first role-playing games for the PC and multiplayer local area network games. Remember those? People take their big old rig to network gaming parties and to meet up with their friends. It's spread exponentially right now, right? It's global, and that can actually be facilitated by blockchain tech to actually take ownership of in-game assets. You see, if your kids are going to work 20 hours a week on a game, they may as well have something to show for it at the end of it, right? These kids are really putting in the work 3-4 hours a day, right? Which is fine. I mean, at least they're getting some, with the online gaming, some sort of social kind of interaction, but let's get something out of it, some actual money, some assets at the end of it. I couldn't bring this into this. Upland, if you don't know, is like a property. It's not really a game. It's kind of a I would say is actually a real virtual world, right? Look up Upland in your Apple or Google Play Store. I recommend it a lot. So Upland, it brings the physical real estate and it's migrated it onto the EOS blockchain in a virtual world. And Brooklyn brownstones are overpriced, as we all know, and out of reach for nearly all young New Yorkers. And it's generally just a local marketplace, right? You've got people living in Brooklyn buying and selling, maybe people from Staten, Queens, or local estates, but it's kind of a small market, right? There might be some foreign investors in there, but it's generally a small percentage of the property marketplace are these foreign investors outside of big cities. But a blockchain-based Brooklyn game is different. Even myself, right? I've been kind of on this for a few weeks, and anyone around the world can access it, right? And anyone of any age, you don't even have to have a job. No credit rating necessary. I think I've got around 26 properties, right? Earning rental income at a far greater ROE, which is return on equity. Far greater than the real life houses, right? The real life Brooklyn brownstones, right? No agents, no taxes, no upkeep. And it was indeed deeded and title on the blockchain. Kind of makes me not want to own an actual house in the real world. Right? You're tying up all that money into bricks and mortar, especially if you're trying to buy a house to rent as a income. Is in reality, you're basically hoping for the price to appreciate. Essentially, the rental income is just keeping the mortgage payments going. Hopefully, right? But you still got to deal with tenants and repairs and all that kind of stuff. So yeah, I'm investing in virtual real estate. Excuse me. There are no numbers nor letters in the future metaverse, right? Human beings have codified their existence through their writings to bring life down to human size to make it comprehensible. But this oversimplifies reality. Words can be illusory. In nature, there are no numbers and no letters for plants or animals, just the here and now. Innate knowledge in their DNA, learned behaviors, and a connection to the multi-dimensional, multiversal, telepathic supermind of nature. Right? They are plugged in. Think how like mushrooms communicate in a connected tribe across the forest floor. They're basically all these. If you know that they're actually communicating with each other as they grow on the floor of the forest. It's kind of amazing, actually. So is reading, writing, and maths just a transitory period for humans? As we evolve beyond our musings and use new technology to plug back into common natural truths of the universe? That's the question. The magnitude of what is coming is therefore incomprehensible to most. Blockchain, AI, telepathic communication, and life in the metaverse are still a few hops away before full understanding is reached. Until then, such possibilities remain largely unfathomable. Bitcoin could actually be a stepping stone, right? Could be actually a stepping stone to a Star Trek world, where money itself is a archaic, barbaric relic of the past. If all your basic needs are already met at birth, then what do you need money for, right? So resource-driven tribal domination of territories is clearly not the way. And all ended up with a mutually assured destruction, right? As the endpoint, which kind of prevented any more further world wars. Humans creating the nuclear bomb, the A-bomb, kind of stopped a global war happening. But there's always that threat of you press that button, then we'll press it, a few more to wipe you out, mutually assured destruction, right? So rather have Wakanda rather than Mad Max. That would be my choice, right? So at some point, global standards that eliminate fraud, corruption, and push cooperation is a more natural being. So basically, what really stops humans from really achieving that is the trust. We don't really trust each other, especially big companies or countries and territories. They don't trust each other, and that kind of generates tension. Tension kind of boils over, and that's what leads to all these skirmishes, right? That and territory and resources. So we've got to kind of evolve beyond that, and we need the technology to drive us beyond this point. That's my kind of thesis. So, as with all S-curve technologies, once understanding is reached, mass adoption will come. Smart money. We have some of the sharpest minds on the planet driving colossal sums of capital that are driving young crypto companies. So, what was worth just $2 billion in January 2015 is now a $1.6 trillion space. It could become a $100 trillion space by 2030 or maybe 2035. It's going to take a little while, but we should get there in the end. Bitcoin at $1 million would itself alone be worth around $20 trillion. I'm still confident Bitcoin can reach 100,000, maybe this year even, and have a general target of around 118 to 128 $1,000. $1 per Satoshi is at $1 million, has been the long-term target for many in the crypto space. John McAfee, unfortunately, will not be around to see it. So rest in peace, John. 100,000 was the play for me when I started getting back into Bitcoin in 2016. It was around $400 to $600 when I started really paying attention to it. So being in crypto for 5 years, it's been a roller coaster. But I believe we're on a home stretch to the race to 100K. It could be a momentous 6 to 9 months. And I say this currently as a non-Bitcoin holder, but still a keen follower on the progress the code has on people's and institutions' worldviews. Bitcoin code, it's like a virus, right? As the chain continues to grow every 10 minutes, so does the number of people it touches, right? It's that virality. Every year, more and more people join that network. So, good thing to point out is the upside of cryptos in terms of price appreciation. It's really, really unfathomable for the average person. So let's try and point this out. Not even counting its first year operation, $100 invested in Bitcoin in 2011, average cost of $4 is worth 875,000 10 years later, and that's after a 50% decline. It was at 1.7, right? The same $100 invested in Apple is worth $1,000 a decade later. So yeah, it kind of highlights the difference between a mature market and one that's just growing and growing. So there's some evidence that Bitcoin may be bottoming. It basically relates to all the China FUD. Not FUD, it's actually happened. It was FUD for a few years, but it actually happened. China actually banned Bitcoin mining. I believe there's still some going on, but most of it has moved away. And they kind of done that because they are pushing their own digital yuan. How do you call it? I think yuan is how you call it. Renminbi. So the macro monetary landscape supporting case for Bitcoin became globally apparent in 2020, in which increased miner conviction. Miners have access to vastly superior financing options such as coin, collateralized debt, liquid options, and futures markets to hedge risk. And this reduced miner production in China due to constraints on global chip capacity. So as the price rises, existing hash power becomes increasingly profitable as little new competition can come to market. So this is from Glassnode, and this is early days of Bitcoin when lots of new coins are being created and there's strong distribution. And after middle of 2018, the distribution, the selling from the miners actually came less, and now you kind of see miners hodling even here, like. Big spike up, a little bit of a decrease, but yeah, kind of leveled out, right, flat. And that means they got access to capital, as we mentioned here, so they don't need to dump on the market every time they create a new coin. So good stuff. So efficiencies of scale. This is really interesting for me because I'm in the DeFi world. So how many employees beyond the initial launch of a platform, protocol, and front ends does it take to maintain it? How many does it take to run a smart contract? How many bankers are needed to enable transactions on DEXs such as Uniswap, SushiSwap, and PancakeSwap? When the liquidity is provided by the user and the algorithm makes the appropriate adjustments, right? It's all done on code. It's great. So how many loan officers does it take to approve your DeFi loan? How many executives does it take to maintain a decentralized digital autonomous organization, a DAO? How many admin staff does it take to operate peer-to-peer file sharing? None. Once it's coded, once it's launched, there may be some maintenance, but there's no ongoing staffing needed, right? So the platforms can continue to operate via peer-to-peer without intervention. This makes crypto orders of magnitude more efficient than traditional centralized organizations, such as the tens or thousands of employees in traditional banking and finance. Coinbase, even who is a main basically app to purchase your crypto, Coinbase alone has over 1,000 employees. So as you can see, the internet built Wikipedia with no economic incentive to do so. So don't underestimate what the internet could build as decentralized autonomous organizations, right? And at the moment, Hex is number one, numero uno. Yep. Why? Because it's uncensored, secure, and decentralized digital economies, right? So crypto protocols enable services to happen with higher security and less cost. Meanwhile, equally efficient structures can be built on top of the new structures for added utility. So the amount of productivity generated is already soaring, and the end result is actually beyond our wildest dreams. So the impact on GDP will be immense as the crypto space gets bigger and new wealth is created. That actually will feed back into the old economy, right? And is the one white swan, not black swan, variable that can mitigate the catastrophic effects of record levels of debt and low interest rates, as many market commentators, economists, traders, and investors have to contemplate whilst they allocate their dollars around traditional financial investments. And as you can see, this is the US federal national debt. It's here we go, 98.2 in 2020 COVID, right? And this is, I believe, just the federal debt. It's not including state, local, household, non-profits, and corporations, which totals 895% of GDP right now. Incredible. So there's at some point we need to get that GDP number up, right? So get that GDP number up to bring the debt levels down, like it happened here during the 50s and 60s and 70s in America. This is kind of a very prosperous time post World War II, and the debt levels actually went down because the GDP went up, right? So this potentially could happen here, and crypto could be the main driver. That's my kind of thesis. So as the expectations for economic growth rise, interest rates should go up as well. Legacy markets like Dow Jones and S&P 500 may jitter along the way, but the crypto markets and the participants in crypto are well versed in crashes. Not calling for a crash, but that's the risk with higher rates, right? They are so used to free money that when you start charging them money, they may indeed cause liquidations as the credit is reduced. But in crypto, we are well versed in crashes, which have only served to strengthen the industry and give it robustness. So liquidations and removal of leverage from the system are actually healthy, as they provide real-life stress tests with no external party there to lend a hand in times of need, like the Fed has to do. The Fed has to, like, I think on a yearly basis, generate stress tests on the banks, to see if they've got enough money. But it's not a real stress test. They kind of do it behind closed doors. In crypto, on May 19th, we saw the most drastic intraday move. On Ethereum, the peak to trough move was approximately 41% in a day. It went from 3,400 down to 1,850. And there were some prints as low as 1,700, with some experiencing technical activities on their centralized exchanges, right? That's why you kind of want to get your money off those exchanges and secured on some sort of either hardware wallet or either a non-custodial app wallet. If you've got like Ethereum, there's plenty of them out there. I should give a few links, but I don't actually want to give advice. I'm not really up to date on which wallets are good right now. I know Dharma's good, but you have to do your research. In DeFi, the majority of the liquidations are non-stable crypto assets. So like Ethereum, as goes up and down, will cause some liquidations, as people will deposit those assets to get stable coins, right? So they want to borrow off their crypto assets, right? But it's important to scale the total number of liquidated volume against the total supply of each asset. So here are the main assets and the liquidations against the supply. You've got Wi-Fi at 5.6, you've got Wrapped Bitcoin at 3.2, Link at 2.4, and Wrapped Ethereum at 2.3%. So projects come and go. Ideas and experimentation are welcome, and as participants who weather the many seasons of crypto get smarter and stronger with each cycle, new diamond hands and brains get forged, right? So if you're new to crypto and come in at the wrong time, you may have to kind of learn that prices don't always go up. Yeah, unfortunately, prices don't always go up. But crypto bear markets generally only last about 12 to 18 months. So it's just a case of weathering the storm, making the correct decisions, and not giving up on hope, and actually using that down period to bolster your positions. That kind of has worked out for me, but it takes a heavy toll. If all around you are losing their nerve, that's kind of the time to be putting money in, right? Not when you're being told to buy. So when people are like panicking, right? Boomers, yeah, again, may fall foul of bringing legacy portfolio management, which is diversification, rotation, and profit taking, to crypto at the wrong time. First, they get in too late to crypto, then they may have been exiting too early, right? S-curves are hard to ascend because of the boom bust nature of crypto, knocks people off the upward path, and crypto bear markets have historically been quiet periods where there appears to be not much in the way of activity, and projects and companies can build for next wave of excitement, but there's also cleaning out period where a lot of these projects basically go there to die, right, during the bear markets. Some come back, but most of them don't actually. But you see a couple of unicorns that emerge through bear markets, and those are the ones you want to be riding, right? Hex is one. Hex was launched at the start of the bull market. It was built during the bear market and launched. Potentially, we could have kicked off the bull market. Hex was that influential, I believe. So the blockchains themselves will continue on regardless. They are oblivious to what goes on around them on the outside world, what price is being bedded on their tokens, right? They don't care. They will just continue confirming transactions and minting new rewards. Okay, Web 3.0, the Metaverse. Web 3.0 is the foundational layer on which these technological developments will take place. Clearer regulation is coming, so countries such as Singapore can crunch through their growing backlog of companies waiting to take advantage of the blockchain-based cryptocurrency ecosystem. They all see the orders of magnitude and efficiencies gained by moving into such tech. And Bitcoin versus crypto. So Bitcoin is disinflationary. Every 4 years, the amount of inflation, the amount of tokens that get generated get halved. So Bitcoin is a good inflation hedge against the giant wall of fiat money that has been printed in the last year and a half. Crypto creates utility, which boosts productivity, which should boost GDP, right? And kind of that, which in turn should boost the interest rate and the price of long bond, which tames inflation in the real world. So if crypto is to really gone on tear, it could actually help the actual real economy. This is kind of my kind of idea. And as crypto becomes a vibrant part of the ecosystem again and spills over into the real world, right? Here we go. Crypto.com is a prime example. Just recently inking a $175 million 10-year partnership with the UFC, right? And did you guys see the fight on Saturday? I was like, oh my God, some savage action indeed. Poor Conor McGregor. Hopefully he gets to recover fully and gets back in the octagon. Let me see. Yeah, crypto.com. The UFC recently went public and has experienced unparalleled growth in the last 15 years. UFC has gone from strength to strength every year. And I believe crypto is here to stay because obviously making a 10-year commitment shows you the health of the market. Tether FUD. Are you guys interested in Tether FUD? Well, I'll just go into it quickly. So this is kind of like a overhang over the industry of crypto. People always throw around Tether FUD. It's kind of a talking point. So the amount of Tether in reserve is 65%, which is in commercial paper, which are bonds issued by companies. And New York has the strictest state laws when it comes to crypto. So given that they have so far signed off on Tether's required quarterly audits, is a good sign that 65% in commercial paper is acceptable, right? So this is all stems from the New York AG's probe into Bitfinex. If you don't know the history, there you go. And this leads on to Hex. And why do I continue to invest in Hex and share it with my friends and family? Because simply put, it's better designed than Bitcoin. And why wouldn't it be? After a decade of network activity, the pros and cons of the Bitcoin protocol are clear to all observers, and everyone involved in crypto for a few years knows what Bitcoin can do and what it can't do. And so with Hex, there's no bugs in the code. It's launched fully on day one and fully audited, and basically, most importantly, audits on the code itself. And Hex is proof of stake, so there's no pollution from Bitcoin miners. You know, there's big old warehouses munching up electricity. There's none of that. And Hex is not on centralized exchanges, not really. And majority of the Hex is to be found on Uniswap, which is a decentralized protocol. There's no liquidations in Hex. You can't get wrecked in Hex. No, it hasn't been done, not yet, by anyone. Give it a try. Hex will always rebound, even if it does dip in price. It does dip in price, but it always rebounds quite swiftly. Also, a great thing about the community, there's no politics or infighting. We have like 250,000 Hex wallets, 40,000, approaching 40,000 stakers on the actual product itself. And so I'm not going to bash about Bitcoin anymore. It's too easy to beat up on it. It's, 11 years old, 12 years old. I think it launched in 2009. So, yeah, 12 years old now. So let's not bash a piece of software as it can't fight back. So it's kind of unfair. Another good thing about Hex is the transparency, right? It's the first major DApp that empowers the users to take control of their money and plan their future. And that will be enough. But given we are in a yield-starved environment, awash with central bank-issued currency, the importance to create yield at a faster pace than the banks can issue is of most importance. Simply put, if you're standing still, you are going backwards. I need to clear that up. This is fresh little blog I just wrote. So yeah, excuse the errors. So the users in the hex and the economic input actually become the network, right? So this is extremely important for virality and engagement in a thriving ecosystem. Built solely around a piece of software may indeed seem strange, but when you consider what hex actually does and the rewards it gives to a certain set of behaviors, namely delayed gratification, less speculation, more asset accumulation, and honoring of contracts you make, then it kind of makes sense why a certain group of people with certain characteristics in their personality will begin to congregate around it, right? The monetary gains also give a reason to promote this product to friends and family, knowing that in the vast sea of crypto coins, Hex is one of the few, maybe only, that actually fulfills its design intention. Yes, that's correct. It's a savings contract on the blockchain, and that fulfills that function perfectly. So, do you want to buy your financial freedom? I suggest you should. So, yeah, there we go. Yeah, I'll clean this up, clean the typos up, and could be a good share for people who are new to crypto, who are kind of on the sidelines or kind of watching and not understanding what's going on. So this kind of gives you an overview, many different factors, and yeah, I hope you guys enjoyed this vid. Okay, peace. Balaji is out.